Hello and welcome to Daily Market Movements. Welcome to the very first episode of Indices Watch. In today's video, we're going to be analysing in depth the Nasdaq100 futures market as well as the S&P 500. We're going to start here with the Nasdaq100. In the past couple of weeks, dating back to the 14th of October, probably 3 weeks here, we have seen a significant rally towards the upside. If you've been watching our videos for some time now, you will know that I did call this. We had this trend line that we've been trading in, and when we hit that bottom of that trend line, I did advise my signal followers to buy this market, and that's exactly what we did. And we were targeting towards the all-time highs, but we just sliced straight through those all-time highs, and we are now trading at a brand new all-time high, up at 16,355. Now, if you're watching this video and you're new to trading, you might be thinking, well, this is fantastic. This market's going to continue to rally towards the upside. Which, yes, it could, in theory, it could, yes. But I'm going to stop you right there because look at the RSI. The RSI, for those who do not know, is something called the Relative Strength Index. It indicates whether a market is overbought or oversold. Any reading above 70s, which is outside of this purple channel that you see, that's 70 and 30. So anything above 70 is considered to be overbought, and anything below 30 is considered to be oversold. And where is the Nasdaq100 trading right now at this moment in time? It's trading up at 77. So we are rather overbought here. And if I just show you what happened last time when we were trading as high as we are on the RSI, we had this massive pullback back here. When was this? This was back in the 2nd of September 2020, so more than a year ago. So if I just, see how far the Nasdaq100 fell, we fell 14% from that level. So a huge pullback there in the Nasdaq100 last September when the RSI was as high as it currently is. So if we were to fall 14%, and that's not what I'm saying at these high levels, but if we were to fall 14%, that would see us back down towards a 200-day EMA. Again, I'm not saying that we are going to fall 14%, but what I am trying to indicate is that we are incredibly overbought. And many of you may disagree, and that's absolutely fine. I'm just sharing with you today my judgment on this market, and my personal judgment is that this market is well overextended and it is due a pullback any day now. So, I think personally what you want to look for if you do want to buy this market is the 50-day EMA. Now, the 50-day EMA is down at 15,442. And if we just see how many percentage points it is, so that's 5% towards the downside. So, if we could get a 5% pullback here in the Nasdaq100, that would offer some fantastic value. And I think that you could buy that, when you consider what time of the year we are trading in, leading up to Christmas historically is a very bullish time for these big tech names. And then, of course, after Christmas in January and February, you have earnings season. And, historically, these companies have come out, the big FANG names, especially the likes of Apple, Microsoft, etc., Google and Facebook. They do very, very well due to people buying Christmas presents, and their numbers normally smash it out of the park. So I wouldn't buy up at these all-time highs. I think that the risk ratio is just not there. Even if you trade up towards 16,500, if I just get rid of this quickly, all these scribbly lines, 2 seconds. If we just trade up towards 16,500, for example, okay, which is there, you're looking to gain 1.5% and you're risking 5%. So the risk ratio is shocking. And even if you wanted to trade up towards 17,000, still the risk reward ratio is you're looking to gain 3%, but you're risking 5%. So I would stay well away from a Nasdaq100 at this moment in time. Wait for that pullback towards a 50-day EMA. I'm going to leave a circle around it because this is an area where I am expecting and hoping that the Nasdaq100 falls into, and this is where I will put some money to work. Moving over to the S&P 500 now. S&P 500, exact same as the Nasdaq100. Again, look at the RSI. The RSI is all the way up at 76. Last time we were this overbought was all the way back when? The beginning of September. And how far did we fall back in September 2020? We fell 10%. So slightly less than the Nasdaq100, but the Nasdaq100 is known to be more volatile as it's more focused just primarily on tech stocks, where the S&P 500 has more sectors involved. But, if we fell 10% here, what would that mean for the S&P 500? Well, if we fell 10%, that would take us straight down towards a 200-day EMA, which would be, some fantastic value here. if we were to fall that down towards that area. If we did, I would be a buyer all day long. But again, I'm not saying that we are going to fall 10% down towards a 200-day EMA, but what I am anticipating is a move to at least a 50-day EMA. If you were to buy this towards the upside, you would perhaps target 5,000, as it's quite a large psychological figure. So you're looking to gain 6%, but the 50-day EMA is at 5%, so the risk reward ratio just isn't there for myself. And then of course we could go even further down towards 10% if we were to correct like we did back at September 2020. But just to make it clear, I'm not saying we're going to fall 10%, but what I am trying to show you all is that the risk reward ratio is not there, and we are incredibly overbought at this moment in time. So look for that pullback. I do believe it will come. When they do come, it's normally sharp and short, and when it does come, I will jump onto YouTube and advise you all when I personally believe it is the best time to be buying. None of this is financial advice. I'm just sharing my own opinion with you all. But that's going to wrap it up for today's episode of Indices Watch. We've just analysed the Nasdaq100 S&P 500. I hope you've all learned something new. If you haven't already done so, please subscribe to this channel. Thank you very much.